Okay, so in this technical analysis webinar, what we will look at is, first of all, we will look at what is trend. We will understand about the Dow theory and how to know if a stock or the market is in uptrend, downtrend, accumulation phase or distribution phase. And after that, we will learn about support and resistance. Like these are important levels from which stock may, either change its direction. For example, suppose if a stock is falling, then at what price level we can plan entry, because maybe some stock has fallen from 400 levels to 300 levels, and now you are planning to take an entry, but a better entry could be at 250 based on the chart. So we will analyze how to identify those levels from where we can take entry or exit, or like also know how to book profits, when to book profits, at what levels there are resistance, so that from there stock price can again fall, so that we can book profits on those levels. So for those support and resistance, for finding that support and resistance, we will use various methods. For example, trend lines, Fibonacci, super trend, moving averages, and we will learn all of it through examples. I will show you real life examples of how these support resistance levels work, and we will also back test these in different stocks in different time frames, large cap, mid cap, small cap, micro cap, every type of stock. Then we will learn more about moving averages. What are the important moving averages which act as support or resistance level? What is their significance, and all about it. Then we will learn about indicators. There are some very useful indicators on trading view. You will find it on other platforms as well, like investing.com and all. So my few of my favorites I will share here, like Knoxville indicator, super trend indicator, and ROC indicator, rate of change indicator. RSI is also widely used, but the problem with RSI is that it many times it gives false indication. Like the accuracy of RSI for me has never been above 60%, but these Knoxville super trend and ROC, these work more accurately than RSI, so I avoid using RSI. But I can also touch upon RSI. If someone likes to use RSI, then they can also go ahead with it. Then we will learn about the candlestick patterns, all the type of candlestick charts, like what is a bullish candlestick, what are the bearish different type of candlesticks. We will see 1 day candlesticks, 2 day, 3 days candlesticks, and we will look at key whenever bottom is formed, what type of candlestick uh, patterns are there, and whenever a top is formed, what type of candlestick patterns are there. Then we will look at the chart patterns, like reverse head and shoulder, cup with handle pattern, uh, ascending triangle, descending triangle, all those type of different chart patterns and their significance. Then we will touch base a little bit upon the sector rotation and index rotation, how to identify them. Then, since micro caps are hit by the ESM, so I have made a customized ESM stock screener, which tells you that which stock has moved by more than 15% in the last 5 days. And accordingly, you can decide that it can go to ESM2 now. And so you can plan and exit accordingly. Like I exited Nessus based on this indicator when it was like near the high, because I knew in advance that it is going to move to ESM. So it can help you in this way, that you can sell your stocks. This is especially useful in this type of market, like painful bear market, where you can exit a stock timely and then again re-enter it at lower levels once it is 1 month has passed and it is likely to come out of ESM2. Okay, so any questions, any queries so far from anyone, or can we start? Any difficulty anyone is facing, they can uh, there's not give a full screen. Okay, full screen, please. Visible. Okay. Viraj, are you using a mobile phone? Because maybe on desktop you will have a better view. Because on phone, some fonts might be uh, smaller. And for charts and all, I will advise you to have this see this webinar on desktop or laptop, so that you will have better visibility on charts. And you can also keep a notebook and a pen handy to note down a few important things in this webinar. Yeah, we will. Most of these indicators will work for SME also. Okay. So first of all, coming to why do we need technical analysis? So obviously, it helps in deciding the entry and exit points. So even for investors who are long-term investors, suppose your investment horizon is 1 year or 2 year or 3 years, then still you will have to someday book your profits, and through technical analysis you can maximize your gains. Like you know when to book profits, or and also it teaches us when to remain fully invested and when to hold cash. For example, uh, the indicators which I used, I will show you. It had given me uh, like a sell call in January for SME stocks and small cap stocks. I will show you through the charts as well, like what was the trigger point. But through these technical analysis, you can it can help you in deciding what cash position you should be in, like how much cash you should hold and how much percentage. Many people prefer to be 100% invested all the time. That also works, but if you have some more time to give to market, then you can make some greater alpha, like you can outbeat the market by switching your cash positions. Like whenever the market is nearing top, you can increase your cash position, and whenever the signs of bottom formation as per the technical charts, then you can be fully invested and deploy that cash which you uh, gain during the top. Then we will learn about swing trading. What are the like there are basically two methods: pullback swing trading and breakout. We will learn about them. So pullback is when suppose the market is in an uptrend. We will learn about uptrend, downtrend and all. But suppose the market is in uptrend or a stock is in uptrend, and then it will form higher high and higher lows. So a pullback is when you buy a stock at the low and then again sell it at the high. While breakout is basically whenever stock uh, crosses a previous resistance zone, then you plan an entry. And but for me, like pullback always works better than breakout, because many times breakouts are false. We will learn about it in detail. I'm just touching upon it. Then it helps you decide your stop loss and target. I personally don't keep stop loss because I invest only in fundamentally good companies. So I use only technical analysis for my targets, when to hold cash, and your entry points, like what are the preferable entry points. Then it makes your decision making more strategic rather than emotional. So it helps you develop a system on the basis of which you can navigate markets. Like you don't have to rely on your emotions, because most of the time emotions always give you false signals. Like whenever market is in euphoria, emotions will tell you to buy more, and whenever market is in pain, panic and near bottom, the emotions will tell you to sell in panic. So emotions don't work well in market, so it's always better to follow some uh, uh, objective criteria of decision making, and technical analysis helps you do that. Okay. So market trend, obviously there are four phases of market. There is an uptrend, then there is distribution at the top, then there after the distribution there is downtrend, and then after downtrend and bottom formation, there is a few months of accumulation. Then after accumulation again uptrend, and this cycle goes on. And for the last 100 years or so, throughout the global markets, for example Nasdaq, every global market, that this thing follows. Like this is the same across all the global markets. So for example, if you check a stock, like any stock, for example, let me go to trading view. For example, currently as you can see on the trading view, Silcher Tech is open. So Silchar Tech is a transformer manufacturing company. So here you can see, for example, in the chart, yeah. For example, as you can see from here, if you see July 2023 onwards, what happened in the stock is from May 2023 to July 2023, it was more or less kind of consolidation, or you can say accumulation was going on. Previously also there was an uptrend, so you can't say that uh, you can consider this as a pullback or consolidation rather than a downtrend. Then again, you can see the best way to identify an uptrend is, first is higher highs, higher lows. So for example, this is your first high, this is your first low, this is H1, this is L1, then this is second high, this is second low, H2 and L2, third high, third low, and so on. So there will be pullbacks. For example, this is called a pullback, then this is called a pullback, this is again called a pullback. So best way to trade during an uptrend stock, in an uptrend stock, is buy the stock near the pullback. And how will you know that what is the pullback point? So you can use moving averages for it. For example, 63-day EMA, exponential moving average. So I will discuss in detail what is EMA, why we use 63 EMA. But currently I'm just focusing on trend and how to trade it. So don't worry, we will get into detail of all the moving averages and all, how to set these from the indicator tabs. I will show you from scratch, so don't worry about it. Just focus on what I'm telling you right now. So for example, suppose your chart looks like this. Okay, this blue line is the 63-day exponential moving average of the stock. Then you will see whenever it touches the 63-day EMA level, if you buy there, then a sudden jump comes. For example, if you buy here, then in the next 36 days, you will generate a return of 60%. Okay. And how will we know when to sell? That we will also discuss. That is another, like, that is after a few slides we will see. But again, if you'll check, again, if you buy here, here it didn't touch 63 EMA, here it didn't touch 63 EMA, although it was very near to it. And one thing which can help you is, for example, 63 EMA. Let me turn off the magnetic switch. Okay, zoom in. Okay, okay, wait. Hmm, Let me. Is it better now? Okay. Yeah. So for example, if you bought here near the 63 EMA, here or here, whenever you bought it, you will make a decent return. For example, here you can see 60% in 34 days, and so on. Here it didn't touch the 63 EMA line, but it bounced back from 1200 levels, and the 63 EMA line was around 1100 levels. So here we will not take any trade, but here again a trade opportunity comes, right? Here again it has given a good bounce just from the EMA 63 line. Here if we take trade, then again we will make 92% return in 58 days. So this is the power of EMA. You can see, right? It touches it and bounces off. It acts like a spring. Here it broke the EMA 63 levels, and that's a signal that market is giving you that the trend is going weaker now. You can see, you can soon see a breakdown of this stock after maybe one or two more if there is no stock, like if there is no negative news about the stock and still stock broke the 63 EMA level, or the index is breaking the 63 EMA level, and there is no negative news about the stock which will affect the stock fundamentally, then that means that the top is near. It's still not here, but it's near. So it again give one more bounce, and after that the stock again crashed below 63 AMA, and then you can see it is more or less in a downtrend. Now it may form lower lows and lower highs. Earlier it was forming higher highs and higher lows, as you can see here. And as a beginner, what you can do is, instead of, you can go here, instead of, this platform is trading view, by the way. If someone of you, like, if someone is not familiar with this platform, then this is trading view. I will share the link and all of trading view with you. So you can go to candles here and select line. So this will make it easier for you in beginner, as a beginner, to analyze this, like higher highs, higher high, higher low, higher high, higher low, higher high, higher low. Then here also higher high, but this time this low was broken, right? It went below the previous low. That this is a signal that the stock is no longer in uptrend. Now it may go sideways for a few months, or it can go to downtrend and give a price correction. If a downtrend happens, that means it will need to make lower lows and lower highs. For example, it can go, it went till here, then it came back here, then it again can come back to somewhere here, then again go here, something like this. So this is called a downtrend. So I hope, like, for example, this was a stock specific example. You can similarly check indexes as well. For example, this is Nifty 50 chart. I will again switch over to candles. I am more comfortable with candles rather than lines. Okay. So for example, post COVID, you can see market was in an uptrend. For example, Nifty was making, let me zoom in a bit. Yeah. Nifty was making, yeah. Nifty was making higher high, higher lows, higher high, higher lows, higher high, higher lows. So till the time it is making higher high, higher lows, you have nothing to worry. You just have to ride the waves, right? You just have to remain invested and ride the waves. 100% invested, ride the waves. The first time it broke its previous low, if you see here, this was the previous low of, like, the previous pullback. You can see, even if you consider here, then this was the first breaking point of Nifty. Then after that, it again, consolidated for almost from August 2020 till November 2020. It consolidated for 2-3 months, but it didn't turn to downtrend. For example, it didn't made a lower high than this. It again made a higher high than this. Although the low was broken, but the high was again higher than the previous high. So again, it continued the uptrend. So sometimes this dip can happen. So, and it was just 2 days. Like, it just broke it for 2 days, then again recovered. We can see only two red candles below it. So usually, whenever I will show you when the market gives exit signal, when to hold cash, and that is a completely different indicator rather than seeing the higher high, higher lows. It's just about trend. So this is what we call an uptrend. For example, here also you can see higher high, higher lows. So this was an uptrend. Then again, sideways market. Sideways market is a range bound market where market keeps on uh, consolidating within a range. For example, here you can see between 15,000 levels to 14,000 levels. It kept on consolidating for 7-8 months. Then it gave a breakout. So this is called a breakout. So I'm just familiarizing you with the terminologies of technical analysis. After that, we will go deep dive and make some structural, strategic indicators and decision makers, which will help you in deciding when to sell, when to buy, and all those stuff. Currently, I'm just familiarizing you with the common terminologies like breakout, trend, uptrend, downtrend, consolidation, all of these basic stuffs. So this was a range bound market. Then here, this is called a breakout because it broke the range. For example, if 15,030 was the range, upper range, then it broke the upper range with this green candle. And whenever a breakout happens, uh, then we can see further upside. So here was the further upside of again, 5-6% in Nifty. Then again it entered a range bound state. Then again a breakout happened. Okay, is it better now? Yeah. So again, a breakout happened here. For example, from this range of 16,000 to 15,500 levels. again a breakout happened through this green candle, then again market gave a good up move. So that's why breakouts are also important, especially at index level. Stock specific, there can be false breakouts as well, but index level breakouts are also very important. Whenever the market uh, goes beyond the previous range, gives a breakout above the previous range, then that signals that a new uptrend can start. The consolidation is over and the new uptrend can start of lower lows and higher highs and higher lows. Then you can see this was the 2022 time, yeah, 2021 time. So 2021 to 2022, the market was more or less here. Also, you can see, for example, let me zoom in. Yeah, here also you can see the market broke its previous low. For example, this was higher high, higher low, higher high, again higher low, then higher high. Previous high low pay, it took support in the previous high low. Then market didn't rose above the previous high. It started falling before that. That means that buyers are losing control and bears are more powerful than the bulls currently. So again it broke the previous low and went below the previous low. So this signals that the market may enter a time of consolidation or downtrend, and the previous uptrend is going to stop. And that this is what happened. For example, from this level, this 17,600 level, this was in November 2021. Then you can see more or less market till April 2022 didn't give any returns on index level. Even after that, for example, you can see here September 2022, even here also 17,600. It keeps on touching that level, right? Till here, yeah, till April 2023. So April 2023 till this time, November 2021. It's almost entire 2022, then 4 months of 2023. So around 1.5 years. Around 1.5 years, index wise, no return. And why? Because the market didn't like broke its previous uptrend of making higher highs and higher lows. Okay, so this was all about trend. We will see more like how to identify when to sell, when to buy, and all those stuff. But this was all about the downtrend, uptrend. I hope you understood about what is a downtrend. When a market keeps on making lower lows and lower highs, uptrend is when the market keeps on making higher highs and higher lows. One easy way to identify, if you are not able to identify higher highs and higher lows so easily, it will take a bit of practice. But if you are not able to identify that, then you can simply use the moving averages. For example, you can use 63-day EMA, exponential moving average, this blue line. So what this tells you is whenever this blue line is like above, you can say more than 15 or 20 degrees from the horizontal level. For example, this is the horizontal level, and you can see that you can clearly see that this line is pointing upwards, right? This is an uptrend. You can clearly see here that this is a downtrend. So this moving average is again a good indicator if you are not able to identify higher highs and higher lows. But you should be able to identify higher highs and higher lows if you practice a bit. So, and it's the best thing. Like if you are able to identify higher highs and higher lows easily, then that's the good thing. So initially you can use moving averages as well. If the moving average is flat, that means the market is neutral. For example, here it's more or less flat in this range. In the previous range bound markets also, for example, here it's flat. When it is uptrend, it's like this. When it is a downtrend, example during COVID time, it was like this. So moving average will also move accordingly with market because it is nothing but the average price of the last days, like last 63 days. In exponential moving average, the recent days have a more weightage, and simple moving average, all days have equal weightage. That's the only difference. Okay, so this was all about downtrend and uptrend. We will learn more about distribution and accumulation now. So, okay, how to find market trend? So one more important thing here is the time frames. For example, the here what we were seeing was a daily chart where each candle represents one day. We will learn more about the candles and what they mean, but for now you can only see that one candle means one day. So this indicates price movement of 24th September 2020. This is for 25th September 2020 and so on. So if we change it to, let's say, 1 week or 1 month, let's say, then the trend will change, right? Because maybe Nifty was in downtrend, uptrend, whatever it is, but on a daily time frame, but in monthly time frame it may still be in uptrend. So that's a thing. For example, if you check here, uh, from July 2020, 2003, or from August 2003 till now, Nifty has barely touched, like, a few times the EMA 63 line on monthly chart basis. So it is more or less on a monthly chart still in uptrend. Even now it's in uptrend, because the previous low, if you see, this was a range of consolidation, this was a pullback. So the previous low was still 16,874, which I don't think the Nifty will reach in the current fall as well. So still it is an uptrend in a monthly time frame, but in a daily time frame it's in downtrend, right? In a daily time frame, if you'll check, if it's in downtrend, clear downtrend. So the trends depend on the time frames. Same stock, same index can be in uptrend in, let's say, uh, a monthly time frame or a weekly time frame, and can be in downtrend in a daily time frame or a 30-minute time frame, right? So trends depend on time frames. For example, in daily time frame, Nifty is in clear downtrend. First low, first like lower low, lower high, lower low, lower high, lower low, lower high, lower low, then again lower high. So this was all about the downtrend, uptrend, and the market trend. So, for example, you can see for intraday traders, a lower time frame can be 5 minute or 15 minute. Higher time frame can be 1 hour, 4 hours. For swing traders, lower time frames can be daily. Higher time frames can be weekly. For investors, lower time frames can be weekly. Higher time frames can be monthly. So it all depends on whether you are what's your horizon, time horizon. For example, you have to take trades for 10 days or 1 month or 1 year or 3 years, whatever it is. So for example, for an investor, the market is can be in uptrend. For a swing trader, it can be sideways. For intraday, it can be bearish. And both of all three of them are looking at the same index, same data, because it all depends on time frame of analysis. Okay. Here again, it's the same. It's called Dow theory. So as you can see here, a swing high is made, higher high, then higher low, higher low, higher low. This is an uptrend. This is called Dow theory. So at least we need at least two pivot points to decide the trend. So these are the pivot points. This is a pivot point. This is a pivot point. So at least there should be two lower lows, two lower highs to say that it's a confirmed uptrend. Then second indicator is that the pullback volume should be weaker than the trend volumes. So this is called trend volume. For example, during an uptrend, this is whenever a market is going up, that's the trend volume, because it's in the direction of the trend. The market is in uptrend and the stock is also, or index is also moving up. So it is called trend direction. And this is called pullback direction. So pullback will be opposite to the trend. For example, in an uptrend, whenever a stock price or index goes down, it is called pullback. So the volumes during the pullback should be lower than the volumes during the trend direction.
Yeah,
So this is the
can you show the volumes on the chart also? Because
yeah,
right,
yeah, sure.
price.
Let me. I will show some stock specific examples. Uh, so this is the volume. So for example, if you check here, during the uptrend, the volumes were pretty high, but during the down pullbacks, the volume during this time, the volumes was low. Then again, when it started forming bottom, uh, or the consolidation, the volumes are low only. Then again, whenever an impulsive move will come, the volumes will shoot up. For example, here in the direction of trend, that again you can see a few good volume days. So these are the volume days when big parties, HNIs or institutions are buying. These are the days. So they will always buy in the market direction, right? Or on the pullback whenever it is touching very important support levels. For example, EMA 63 and all. Here also you can see whenever the market moves in the direction of like the trend direction, the volume goes up. Then again, when it falls back, the volumes are pretty low. So this happens with all stocks or all index. Then we can also draw trend lines, which acts as a support or resistance. So for example, in Nifty, uh, yeah, I'm sharing how to draw trend lines. Zoom in a bit. Yeah, better. Let me delete this. This is the previous drawing which I made. Okay. So for drawing trend lines, what you can do is you can click on this magnet button. Okay. This one. So it will help you in drawing trend lines. It will automatically adjust the line to the nearest, like the lowest point or the candle. It will align the line with the candlesticks basically. Okay, you click on this magnet button, then either you can go on this the trend line tools and click on trend line, or you can use Alt T. I use Alt and T. So on the keyboard, type in Alt and T, then click here in the uh, then you can just hover it around any support level or any you can see uh, the next whatever higher high or higher do you find, so that will become a trend. For example, here you can see whenever a stock touches this trend line, it again bounces off. But for me, moving averages work better than trend line because trend line change very rapidly. For example, it followed this trend line till September 2020, then it again changed this trend line, and it started following another trend line. So the trend lines keep on changing, but the moving averages, are dynamic, and it keeps on changing with the price. So moving averages are any days better than trend line. But sometimes you will find that some stocks behave as per some trend line. It is for a long period of time moving in a trend line. We will see those examples. I have some real life examples as well in the last to show you of all the like theoretical learning we will learn. We will apply those to those stocks and see. Okay. So now we have seen just uptrend and downtrend. Now coming to the accumulation. So what is accumulation? So after a downtrend, a phase of accumulation is done. So accumulation is buying by the institutions and the ultra HNIs. So during accumulation, what most people think is they will buy in very good volumes, very high volumes, and the stock will suddenly go up. But that's not the case because suppose you are an institution, you have 10,000 of crores to manage, right? You have to take entry into a stock. Let's say its market cap is 15,000 crores. You cannot deploy all at once. For example, you have to do a buying of, let's say, 100 or 200 crores in that stock. You cannot buy it all at once. What you will do is, because, for example, suppose you put in all that volume in a single order, then the stock will hit UC and then there will be no sellers. So first, you will get your stocks at a higher price than um, uh, a higher price. For example, suppose you have to buy at 100, you and the upper circuit price is 105. You bought, let's say, 1 lakh quantity. You want to buy, let's say, 1 lakh quantity of shares. Then whenever you will place that 1 lakh quantity in a single go, what it will do is it will absorb all the seller quantity and it will make a UC. So some of your buying will be at 100, some will be at 102, some will be at 104, some will be at upper circuit also, that is 105. But if you do it smartly, for example, if you buy 5,000 shares today, 5,000 shares after 2 3 days, 5,000 shares after 3 4 days, then that will frustrate retail investors and the sellers will keep on coming. And you will get good stocks, you will get the same quantity of the stock at a lower price. For example, an average price of 100 only, rather than buying some at 105 and all. So in what during accumulation, what big institutions or UHNIs do is they will buy slowly, not in very big volumes, but keep the price in a tight range. So that's the key. For example, I will show you some charts to show you how it is done. So they buy slowly because they require large quantity. If they buy in single order, it will lead to UC. And how to identify accumulation? So obviously it will happen after a downtrend. Since the stock price has crashed, it has become attractive to institutions and UHNIs from a valuation perspective. So that's why accumulation can be done in those stocks from their perspective. So another sign of accumulation is the range of that stock will be low. For example, it will move from 100 to 105, 100 to 105, and not like 100 to 130, then coming down to 70, then again. This type of volatility will not be there during accumulation. During accumulation, the operators keep the price within a tight range of, let's say, 5%, 2%, 3%. So within that tight range only, because they want their stocks at a particular price, they will only buy at, let's say, 100. So they will keep that price in that range. And you can see some regularly some bad news coming about that stock or about that sector. If it's a large cap or a mid cap stock, then some bad news may be flowing in, for example, some from some news channel and all, because there is a entire nexus of all the media houses, big media houses, the corporates and the operators. So they, for to accumulate at lower prices, they will spread rumors, or they will extrapolate things. For example, suppose there is a small small fundamental change to the company, or a small setback for the company, but they will extrapolate it so that retail investors get panicked and they will buy at cheaper prices, because their view is usually long, because they can't sell and buy in 2 3 days. They need time. They, for the buying itself, they need 2 3 months. For the selling, they will need another 2 3 months. So their view cannot be 10 days or 15 days of holding, right? Their view will be 2 years, 3 years. So for that long period of time, they have a longer horizon, and in between they will keep on trading. But uh, the thing is, you should look for these three indicators. So after a downtrend, valuation wise, it should be attractive, low volatility, range bound zone, and some bad news coming which may not affect the company fundamentally, the revenues and PAT that much, as the panic is being created, as much as that panic is being created. So there was one famous saying, that for example, there is a cinema hall. Consider that there is a cinema hall, and you know uh, suppose the ticket of the theater is, let's suppose, 100 rupees per ticket, and the cinema hall is entirely filled. Okay, now suddenly a smoke comes up in some corner of the theater. So after that smoke, everyone starts leaving their seat. And the rule of the theater is, you cannot leave your seat until and unless some person from outside is ready to take your seat for some money. Okay. So now what will happen? There is some smoke. So obviously people bought the theater tickets for 100 rupees, but they will sell it for, let's say, 20 rupees, 30 rupees, 40 rupees, whatever they will get, because they are fearful of the smoke, that it might be fire and they can die, right? So same thing is with stocks. During panic times, what people do is, they sell their stock at whatever price they get, because they think that there is some smoke in that corner and that could be fire. As an investor, our job is to differentiate that illusionary smoke from actual fire. If there is an actual fire like Yes Bank, Gensol, then you should stay away. If there is illusionary fire, there are only rumors, it's not going to impact your PAT and revenue much, then that's an illusionary fire. So you should take that opportunity of getting that 100 rupee seat in 30 or 40 rupees, right? So, okay. Now coming to distribution. So here, obviously, it's completely opposite of the accumulation. Here, institutions and ultra HNIs start selling. They also sell slowly because they require large quantity. If they obviously sell in a single order, then it will be LC and all. So it happens obviously after a uptrend, because market has been in an uptrend, valuations have become expensive. Now they will look to book their profits. So distribution, unlike accumulation, here the volatility is high. In accumulation, what we saw was that uh, the range was very small. For example, the price will only fluctuate between 100 to 105. But here price can fluctuate from 100 to 130 as well. Here the volatility high is high because of panic, because retailers got panicked easily, and it can be the case that suppose big HNI like or a huge quantity selling came one day, then other day some retailers can also sell and the price can go further down. Then the operators will have to move the prices again up so that they can sell again. So the volatility is high here during distribution. And here, just before the distribution, you will see many good news coming to create FOMO among buyers, because they will need very large amount of buyers to sell their shares. Because again, like just like the theater ticket, they cannot go out of the theater until and unless someone is ready to buy their ticket. So here also they cannot sell until and unless someone is ready to buy, right? For example, let us take example of one very famous SME stock, Oriana. Because I'm taking this because it has a fairly uh, good history. For example, it listed in August 2023, so it's more than 1 year. So, for example, here you can see after listing, it showed an uptrend, again a lower low, lower high downtrend. Then this is accumulation. So during accumulation, you can see the price range, right? During accumulation, the price keeps on fluctuating between this narrow zone, between 350 to 315, or let's say even 300. 300 is the lowest point, but it's mainly a range of 5%. This range is where the most of the action is happening. 335 to 300, 15, 20, or 310, right? Within this 5% range, the entire accumulation is going on. Volumes are still low. Unlike many people who will say you that during accumulation volumes are very high, volumes are low because they don't want to show retailers that they are buying. First, second, they cannot buy all at one day, because that way UC will hit and they will not get shares anymore. So they will keep on buying every day, but in small quantities. Then after accumulation, uptrend, pullback, uptrend, pullback. So that again, the stock is in uptrend, forming lower lows, lower highs. This is again broke the previous low. It broke the previous low, but took support from the 63-day EMA line. So that's why 63-day EMA line is very important, right? You can see one day it broke, like the next day itself it recovered above the 63-day EMA. So someone bought in 63-day EMA, you can see what kind of crazy returns you will be making. 105% in 36 days. So the condition should be that stock should be in uptrend. That's when the EMA 63 technique works. Okay. Then again, here you can see this is the distribution. Why distribution? See the range. The range is very high, pretty high here. For example, stock is moving from 2700 levels to 2000 levels. So here itself, like the market condition is also responsible for it, because after this selling during this period, maybe this some parties might be buying here as well. For example, considering that this is a narrow zone, 2200 to 2000 level, this is a narrow zone. Maybe after some, this was EMA 63 line as well. So but you can clearly see that it is going below the EMA 63 line multiple times. So when this is happening, it is not rebounding strongly after touching the EMA 63. Like previously, always it has rebounded whenever it has touched EMA 63 line. But this time it was different. It kept on falling below EMA 63. It came back, but again touched EMA 63. So when a stock keeps on retesting EMA 63 line, that is not a good signal. That doesn't show technical strength in the stock. I'm not saying that the stock is fundamentally bad or something, but it's just operators play. If you are a long-term investor with let's say 2 years, 3 years of vision, it doesn't matter to you. Stock will again rise back if the company is fundamentally good. But if you want to sell on high and buy on low, then you need to follow some technical behavior. So here also you can see that whenever a stock goes below the MA63, it loses that strength to go ahead. Here it rebounded strongly, but again this was your sell signal, that when it clearly didn't rebounded within the next 2 3 days. then 2100, 2200 you should have exited, because now it is forming clearly a downtrend, and there is still no signs of bottom formation. So might go till 750 level, don't know, or 960. We will check the levels, how to check levels on where to buy to maximize your risk to reward ratio. But this was just to showcase how is accumulation done and how is distribution done. So if we check, for example, another stock which listed, let me see some stock which listed 1 or 2 years back. Mm, let's consider E2E, for example. Yeah. So E2E also you can see higher highs, higher lows, higher highs. So this was in clear uptrend, right? Here it touched EMA 63, rebounded within 2 days. So whenever it comes near EMA 63, it gains good support. So this was in uptrend, but this was your clear sell signal. When it went below EMA 63, didn't rebounded, kept on making lower circuits, then it was a clear sell signal. Even if you sold it here, somewhere here, you should still be like almost, it's the stock is down almost 50% from here. Previously it didn't fell below EMA 63. It was in strong uptrend. Here also, if you buy, here also, if you buy, here also, if you buy, you will be in very good profit. But if you buy it here, after it went below EMA 63, considering that it has fallen so much from its previous all-time high, let's buy it here. Then, technical analysis might have helped you from doing it, because you won't buy a stock below EMA 63 if it is for trading purpose or for less than 1 year time frame purpose. Previously, also you can see just below or above EMA 63, it has given good support. Then this was a accumulation phase when the stock was between 177 level to 164. This is a tight range. So you can see the stock price is going nowhere. It is just keep on fluctuating within a single range, like 4 or 5% range. So this is a sign of accumulation. Everyday buying is happening by institutions. Indicator. So this indicator, if you use rightly, then it could have saved you from this fall, and it helped me save my, like, I was almost 30% cash in January. I told in the group as well. Uh, Around 20th or some mid January or so, I started selling heavily. Why? Because this indicator told me clear sell signals that the market has stopped. For the next 1 year, it will be painful. So I will show you how it works. It is a very beautiful indicator. I will backtrack it for all the previous falls in market and show you that it has worked always phenomenally. Like always, it has worked always. Let me first of all let me remove all the trend lines and also that it doesn't confuse you. Yeah, EMA 63. Let me hide it. Okay, volume. Let me hide it. We only need two things. So first of all, I'll show you how to apply this indicator. So you just have to go to this indicator tab here, then type in rate of change. Then you can click here. Then in the settings, click on the settings. It will automatically come here, but you have to change the settings. Click on settings. Then in the length, you have to click on 18 for Nifty 50 stocks, like for Nifty 50 index. You have to click on select here 18, and the time frame you have to select. Okay.
Harsh,
Yeah, hello.
yeah, Harsh, is it a free version or the premium version?
It's in the free version.
Okay.
It's available in the free version as well. Okay, so if you select here 1 month, then it will be ready to use. Okay, so I've already created it. So yeah, I will delete this and use the previous one because some levels are also marked in it. So yeah, so this is, as you can see, 1 month 20 length. So you can see here. So you have to change this to 18 for Nifty 50, and you have to use 20 for small cap index. So currently we are analyzing Nifty 50, so I will keep the length 18, time frame as 1 month. Okay. Now what you have to do is, let me, yeah, better. What you have to do is near,
First, I do not see any chart in the under the ROC, which you see the second graph below.
where?
So what settings, the ROC part, the below graph, actually what settings I have to apply to get that?
This one.
The graph actually.
Can you type in the chat box?
Okay, the graph which you are showing in the screener actually, the trading view. Not able to see the second below graph. You have two graphs.
Okay. So you are not able to see on your side or?
Yes. Yeah, in my side actually. What settings I have to apply to get that?
Okay. So in trading view, are you opening your trading view?
Yes.
Okay, then you are going to indicator, you are typing in rate of change.
Yes.
Then after selecting rate of change, can you do you see this thing in below your chart?
No, so I just selected the rate of change. So rate of change,
Okay.
I see, but the graph is indicators are not showing the way which you are seeing.
Okay, so this is not showing for you.
Yeah, no, I have one as well.
Okay, so do
Yeah,
one thing.
Harsh. So can you draw charts from fresh settings, Harsh? Like at least few examples after your explanation. If you can explain, draw charts from fresh settings, then that would be helpful.
Okay, raw chart. Hello?
Yes, Harsh. Yeah.
Okay, no worries. For example,
Some of the settings we already adjusted actually.
okay. So this do you want to know the settings or?
Yes, Harsh. Yes.
Okay. So in the length, what you can do is, okay, from scratch, for example, you mean, right? Just click on, for example, let me hide it. Okay. Now, what you can do is click on indicators. I'm telling it from start. Click on indicators. Type in rate of change. Then if it's not showing, like it is showing for everyone, right? Rate of change, because this is not a paid thing, I think. Is it showing for everyone?
Yes, rate of change is showing, but it's asking premium version. Like it's not available free.
Okay. So rate of, okay. So if you have an account on Zerodha, then you can use the premium version of TradingView for free. You can go to Kite, then Kite may you can go to settings. Then in settings there is a chart option, and in chart there are two options. I think one is some IQ, chart IQ, and another one is TradingView. So the default one is chart IQ. Then you have to switch to TradingView, and then whenever you will open charts on Zerodha, it will open on TradingView, and you can use rate of change and everything. Okay, but I think rate of change is not a paid indicator. Maybe you have applied some additional indicators, and I think in the paid version you can only use two indicators at a time. In the free version, I mean. Okay, these doubts I think we can clarify later as well. Like once you learn how to apply, then we can later on the Telegram channel, which is made for this technical analysis webinar. On that Telegram channel, you can ask your doubts, like if you are having difficulty using rate of change or any indicator which I show in this video. Then what I can do is I can help you in navigating those steps. Like I can write the stepwise method how to access that. Does this sound good? Because if like
Yeah, sure.
because this way others time will get wasted, right?
Yes, sir.
You are
Okay.
right, Harsh. So I am able to plot it, and in the free version of the
Okay,
trading view. So
great, great,
you're right. At most, probably people can use two indicators. Yeah.
great, great, great. So hide other indicators and only like click on ROC for now. So that way you will be able to use it on free version as well. Okay. So if you click on this ROC indicator, and what you can do is in the settings tab, you can choose any length. Like for example, for 20, okay, for ease, I am not making it very complex for you. You can keep the length 20 for Nifty as well as small cap, and the time frame as 1 month. Okay, this is also perfectly fine. You can use either 18 or 20. It doesn't matter. You can use 20 as well, and time frame should be 1 month. Okay, then you can just expand this. Here you go. So now you need to draw one line around 45 level. So add one line around 45. Keep it up, it up. Yeah. Now, and one dotted line will always be present at 0. Okay, so we have two lines here. One this red line at 45, one this dotted line at 0. Okay. So now what we are going to do is let's keep it. Okay, currently it is daily time frame. I will change this to weekly so that we can see the trend. Okay. So now what uh, what we need to do is we need to, okay, yeah, now better. So what we need to do is we need to book our profits and hold cash, at least 30-40% cash whenever it touches 45 level. I personally, what I do is whenever it crosses 42, 43 levels, I start selling. I will sell like 5-10%. Then when it reaches 45, I will hold 30-35% cash. And whenever it reaches to 0, you start buying. Whenever it reaches to 0, remain 100% invested. Now let's backtrack it. If we do this in the entirety of this Nifty, then how it will save us from getting trapped at top. Okay. For example, let's see here. This time it, like, it gave you buy signal around here, right? It was 0 around here. Let me zoom in a bit so that everyone can see. Yeah. So for example, it does 0 here. This dotted line is 0, right? This dotted line. Let me make a line here as well at 0. Or is the dotted line fine? Is it visible to everyone? Is the dotted line visible to everyone?
Yes.
Yes, sir.
Okay.
Yes.
So it told you to buy around here, somewhere here, around 3000 levels Nifty. When it was October 2008, it was the crash. Okay. It told you to buy around somewhere here, 3200, 3300 levels. It started telling you to buy. This was this entire time it was below 0. So it was a clear signal to keep buying during these levels. Then it told you to sell when it was near this red line 45 at here. So see, it told you to buy somewhere here. It told you to sell somewhere here, right? So you made 67% return Nifty index wise in less than 2 years. In less than 2 years, Nifty gave, uh, I think 1.5 year maybe, or yeah, around 20 months. In 20 months, Nifty gave 67% return. Why? Because you bought at near bottom, sold at near top. Then again, obviously, it went above this level as well. It went till here. So you missed this. But the good thing is, after this, you can see this again, the drawdown came. And now you are, it is again giving you buy signal around here. It again does 0 here, right? So it again give you buy signal around here. So if you keep buying around here, then again Nifty will give a good up move, right? So for example, you bought started buying around here, you again bought here, you again bought here. So average price would be around here itself, right? I'm not wrong. Like I'm not doing this. If you bought around here, right? If you bought around here, here, everywhere. So next time it is telling you to sell is around here, right? This time Nifty touched 45. Yeah. Again 72% return. So again, if you check, you almost bought at bottom, you almost sold at top. After this also market moved a little bit, but it doesn't matter because it is again telling you to buy here, here in the bottom, Feb 2016. So you sold here, you bought after October 24th to Feb 26. It means almost 1.5 years. So 1.5 years, the money is with you. And you what, like obviously for 1.5 years, you will put it in gold or index for like bonds, corporate bonds and all, you will earn 10-15%. And after that, it is giving you buy signal at a lower level than the sell signal, right? You will again buy here. You will again buy here. It is touching zero here, right? You will again buy here. And next time it is telling you to sell is here. Somewhere here. Yeah. So again, 50% return in 623 days. You again bought at almost bottom, sold here. After this also market rallied, but don't worry. It will again give you a buy signal below this level. It again gave you a buy signal here during the COVID bottom. You can see.
Hi, Harsh, this 45 number is your own interpretation or this is some standard one?
Which thing? 45. Okay, this 45.
Hmm.
So there is a reasoning behind it, but uh, this is my back tested level. There's no, you will not find it in any book or anything. This is my back tested number. I have back tested it on almost 25 years of data, and after that I found this number to be the most appropriate. If you like keep it for example for small cap 100 index, this number is different, and there is a rationality behind that as well. What this rate of change indicator does is it does nothing but it calculates your uh, rate of change in index in the last 20 months. For example, here we have chosen length as 20 and time frame as 1 month. So in the last 20 months, how much has market, increased or remain same or whatever it is? What is the rate of change in the last 20 months? So zero means that market has given zero returns in the last 20 months. So that means that obviously corporate earnings should have increased in the last 20 months. At least corporate earnings will increase by 20%, right? So 20% correction is already there. There will be some price correction as well from the top. And when it reaches 45, that means that Nifty has given in the last 20 months, it has given 45% returns. That means obviously the market is getting overvalued. Why? Because Nifty usually gives 12-13% type of returns yearly, right? So in 20 months, you can expect what? You can expect 20% type of returns on an average. If you consider 10 years time frame, then on an average in 20 months, you should get 20-22% return in Nifty. But if you are getting 45, that means clearly means that market is overvalued. ऐसा तो नहीं हुआ, it hasn't happened that the company's profit has suddenly, like large cap company's profit has suddenly grown by 30-40%. It's not like that. So obviously your market is getting overvalued. You are entering euphoria because market has already given 45% returns in the last 20 months, and it is institutions institutions also follow this ROC indicator. So they also start buying whenever it gets near zero. That's why market has always rebounded whenever it gets near zero. So it's a tried and tested method on 25 years of data, and I will advise you to also backtest it. Okay, backtest it. Open Nifty chart after this webinar, maybe whenever you get time, backtest it and see the results yourself, whether it is able to save your money or not.
Send me a microtap, what are the number which you have backtested?
I will come to everything. I will come to a small cap and all after it. So
for this also, Once it
Mhm.
crosses the 45%, what is your
Mhm.
strategy? Do you sell
So,
entire portfolio or do you
mhm.
sell the 20-30% position to
Okay, so
make it
when it
into cash?
crosses 45, I will keep on selling 10% every five. Like for example, at 50, I will sell 10% more. At 55, I will sell 10% more, and so on. And I will empty my portfolio at 100. That is the absolute top for me. Until and unless it again gives me a buy signal. And if I have obviously, if I have emptied my portfolio, then I will start buying sooner than rather than waiting for zero. I will start buying from maybe 10 itself or 15 itself. So that depends on allocation also. So you can modify it according to you, but that's my personal use of this tool. So I start my buying whenever this reaches 5 or 8, that single digit level basically. Whenever it reaches single digit level, I start buying. So for
Does it
example, you
work
can
on
see,
the only index or do you also follow for this particular stock also?
no, this
Rate
will
of
work only on index because stocks profit can vary greatly, right? So they can obviously give 2000% return in 2 years and still be undervalued. But index cannot be like that. So index always is a collection of stocks. So ROC indicator will work only on index, not on stocks. This is only for finding market top and bottom and euphoria and panic. So it is a strategy where you can shift. It is used to switch your cash positions. For example, when to be 100% cash, when to be 50% cash, when to be 100% invested. So for that, you can use this indicator.
and does it work on the SME IPO index also?
SME
Uh,
IPO, I will tell you how to apply it on SME stocks.
okay, thanks.
Yeah. Okay. Chat. Okay. There are some queries in the chat. Is it a leading or a lagging indicator? Okay, so it is obviously a lagging indicator because it derives from the past data, but in terms of market, if you see market wise, for example, whether after the price movement this indicator tells you no, then it's not, because before the price movement itself this indicator tells you the market has stopped. For example, if you check recently here also, it told you not after the price correction, like moving averages if you will use. Let me show you. Here also you can see. Here also you can see. For example, if you follow, for example, if you follow moving average. So let me come to lagging indicator and is there any other query as well? I will take all of it in one go. Can you show once again how to draw the red line? Okay, I will show it. What ROC is telling at current Nifty level. Okay, I will cover it. Is it leading or lagging? Okay, I will cover leading and lagging. ROC में time setting not shown, like 1 month. Time setting is 1 month. I have already showed you here. You can go to inputs, length 20, time frame 1 month. This is it.
Uh, if we go with Zerodha,
Mhm.
it's not showing that time setting.
Okay, okay. So that might be the case with Zerodha, but you can try the free version without the Zerodha. Because I have the premium version, so I might not be knowing what's there in Zerodha. But if you will try the free version also, I think many people have tried it using the free version. It's working fine for them. Uh, okay. Leading and lagging indicator. Okay, coming back to the leading and lagging indicator question. How you draw the red line? Okay, red line is basically nothing. You, if you hover here, there will automatically be a plus sign here. Just click on this plus sign and then draw horizontal line at whatever level you want to do. Then you can edit that. For example, if I click on this, you can go to settings. Then you can change the coordinates. For example, you can type in here anything 50, 60, 70, whatever you want, and it will automatically be there. Okay, so if you see here it gave you the sell signal. So it is not a lagging indicator, because what a lagging indicator means is that it will tell you after the price correction. For example, moving averages are lagging indicator because if the damage has already happened, some damage has already happened, right? For example, if you check from here till here, 12% correction has already happened. After that, EMA 63 is telling you that market is going in downtrend, right? So here 12% you will be losing. But if you follow RAC, it is a leading indicator because it is already selling you to telling you to sell at top. It gave you the sell signal here in the current correction at the exact top on 23rd September 2024. So if you sell here, then all of this drawdown could be saved. And this is for large cap stocks. Nifty 50 is meant for large cap or mid cap stocks, not for small cap stocks. For small cap stocks and micro caps, the rally continued till January. All of us made money till January. From January itself, from last 10 days of January, like from 15 January onwards, the pain started coming. And I will show you through ROC indicator. It also told you to sell only in January, not in September. It told you to sell large caps in September, but it told you to sell small caps, micro caps in January. I will show you how. But it is a leading indicator. That's my thing. That's my core point. That it is not telling you to sell after the price correction. It is telling you to sell before even the top is made. So 3-4 days advance, it tells you that you need to sell. And again, it will tell you when to buy. Like you could have saved entire 2021 to 2022 ka price wise and correction and time wise correction if you followed this. If you sold near this, bought near this, you would have saved a lot of time. Like this entire 1.5 years of time correction you would have saved. Okay, so it works. As you can see, it works perfectly fine in Nifty 50. Let's see about micro caps and small caps. Is there any other doubt related to this so that I can take it? You can type in the chat box. Can you show when it has given the clear sell signal in Nifty lately? Okay, I've already showed RAM in January. You can see it touched here 45 levels here on 23rd September 2024. It gave sell signal. Buy signal still not come. It's still around 14-15 levels. So maybe after some price wise time wise correction of few months, this will come to zero. Once it comes to zero, buy like heavily. Like it's a clear buy signal.
Harsh,
Any other questions? Hello.
the actual sell signal was on 26 December 23, right? The
26 December 23. 26 December.
Correct, that top, right? The one it is
This
touching
one.
the red line. Correct. Here we would have ideally sold, right? Because it is touching the red line.
It is still not touching, but yeah, you could have sold maybe 5 or 10% of your portfolio. It's still 38.
Okay.
It's still not above 40. Above 40, I start selling.
Okay. Thank you.
Above 40, maybe you will sell 5%. Till the time it reaches 45, be 35% cash. If it reaches above 50, 45% cash. If it reaches above 60, 55% in cash and so on.
Got it.
But at least 35% in cash, 30 to 35% in cash when it reaches 45 levels. That's the core point. And once it starts reaching in below 10, start buying. And zero pay, you should be only left with 5 or 10% cash. If it goes further below zero, then maybe you can deploy all your cash, like -5, -10, you can deploy all your cash. If it goes to -20, 30, 40, these type of levels, then it's a once in lifetime opportunity to make money. Use leverage and buy. You will get those signals only during COVID, then the 2008 crisis at the absolute bottom. So that is a once in a decade or once in a lifetime type of opportunity. Don't miss it. Any other question with this? Okay, I don't think there is any other question. So let's move to small caps. How to use it for small caps? So for small caps and micro caps, for example, SME. So the thing with SME, okay, I will come to SME later. First, focus on small caps. So for small caps, your line should be at 100, as here. Time frame should be same. I have kept it simple for you. Length 20, month, time frame 1 month. Okay. Source close. This means closing price. Okay. at 100 you should draw one line, at 0 you should draw, obviously there will be a dotted line. So you should buy here. So let's backtrack it. Let's see how effective it is. You bought near here, like, right, you, this is 0, so you bought near here, somewhere here, then you sold here, you made 108% in 602 days. This was a clear sell signal. It kept on hovering around 100, it even went above 100. So entire you can see index wise, if I zoom in a bit, yeah, so it gave you chance to sell in December, in January, then some fall came. Then in Feb, it went below EMA 63. So EMA 63 is a little bit lagging indicator, but for trading pullbacks, EMA 63 is very good, but it is a lagging indicator. Uh, so, for example, if you sold somewhere, started selling somewhere here, it gave you enough time to quit, right? It gave you enough time. You could have sold it near here, 19,000 to 19,500 around levels, right? But let's see the previous falls as well. For example, previously it told you to sell somewhere here. It exactly didn't touch 100 here, but as I said, like you shouldn't wait for that level. You should start. It actually touched, if you see, yeah, 96, 97 levels. So you should start selling above 90. Whenever it goes above 90, you should start selling. At least you will be in 20% cash at 96, 97 levels, right? If not 30, 35%, that can still save you money. Then you can deploy it here. For example, if you sold here, somewhere here, you can deploy it here in the near the bottom, right? So you could have saved easily 46%. So in terms of drawdown, it will be somewhere 32% drawdown you could have saved. Similarly, here it was a time-wise correction. If you sold here and bought near here, here also, let me zoom in a bit. Here also, if you see, if you sold, okay, if you sold here, somewhere here, and then again bought back here, you could have again saved yourself from 25% drawdown on small cap index. And this is a drawdown index, so your portfolio will be like, obviously in portfolio drawdown can be more. Even here, if you see, this was trading below zero level for a long time in 2021 to 2023, almost 1.5 years of consolidation. Entire period it was below zero. So after that, it gave a good rally, and you can book your profits here after 85% in 406 days. Even if you buy somewhere around here, it will be good returns. Like in almost 3 years or 2.5 years, you will get around 90% returns. Again, if you buy here, around here, somewhere here, then again, if you sell somewhere around, okay, this we already covered. Then okay, again, if you buy around here, here you can see it is touching the zero. You will buy somewhere here. Then you will sell not all quantity because it is not touched 100, but almost 20% type of quantity. Then again, you are making good returns. Again, here also you will be able to generate good returns here as well. Here also you can see it was trading below zero for this entire period. From here, if you started buying, so this was the COVID fall. But if the COVID fall didn't happen, then this was more or less the bottom itself, because इसके नीचे price was not going. The price was taking support from here plus minus 3-4%. But if you bought here, if COVID didn't came, then also you would be making good returns after like post COVID. So here also, if you check, if you buy here, if you sell here, this was a sell signal. So 98% returns in 100,000 days, almost 3-4 years. Here also you can see the same thing. it gave you sell signal recently in like entire December. It was under the sell signal. You can check.
So Harsh, one question. It
Mhm.
always reverses after touching zero or going slightly below zero because nowhere it is reversing between 0 to 100.
Yeah, right. It always does that. You can check yourself the data, right?
Okay.
Because valuation wise comfort comes only when the last 20 months investors don't make any money. Then the institutions start worrying and feel the need to take the prices up. Because if they are still in profit in the last 20 months, then there is no reason for them to take the markets up. They will focus on some other markets.
Got it. Thank you.
Yeah, have you checked this on BSC IPO index also?
Yeah, I am coming to that. So see, the thing with BSE SME IPO index is, let me share you. BSE SME IPO index. Let me clarify a few things about the BSE SME IPO index. First, if I go on screener, let me go on screener. Yeah. Yeah. So if I go on screener, if you'll check the companies in BSE SME IPO index, the constituents, then you will see that all of these are the recently listed IPOs. So this is basically your recent companies. Not It is not reflective of the entire SME market. This is number one. So obviously, recent IPOs perform better than the previously listed companies because there can be some valuation gap in the company. So uh, this is the second thing. Third thing is that obviously due to because over type of return, because the index have generated massive returns. For example, if it was launched at 100 rupees in 2012, I think, and now it is, even after the correction, it is around 80,000 level. So it is almost uh, what you can say crazy type of 80x type of returns, right? 800x type of returns. So the second thing is key. If you will plot it using ROC, then you will see insane. It going to insane levels because in 20 months period, this SME IPO index will always overperform. Like it will go to 2000 or 1000 maybe, and it will never come to 100 because this index in the last like the 20-month return has never been zero. Why? Because the index keeps on changing very rapidly. If you check this index after, let's say, 3 months, almost 50% of the index will be changed. So the companies keep on changing so rapidly that because recently IPOs are only featuring in this, right? So the thing is that uh, whenever some new IPO come, obviously there is frenzy about it. Not in the current market, but whenever there is bull market, there is frenzy about it, and it goes 2x, 3x. If the stock is in good sector and there is some valuation gap, then it goes easily 2x type of one like 50%, 60%, 2x. So due to that, there has been very high return of this BSE SME IPOs. So ROC indicator does not work for it, but you cannot apply it directly, but there is a very high correlation between Nifty small cap 100 index and SME sector overall. To check this, currently, I think in this trading view account, I think, okay, this I made for, okay. What you can do is, okay, what you can do is, I'm showing you the process. This can be a to do for you. So what you can do is, you can type in the different names of the SME companies here, for example, and use a plus mark for all of them, like Alpex, for example, whatever is the Alpex Solar, right? Alpex Solar plus Selecor plus. So what this will do is this will create an index for you. Okay. If you will type in different company names here, keep on adding them, then this will create an index for you. So through that, you can create an actual replica of BSE SME IPO. For that, what let me do it for you, but it will take some time. But okay, use SME. Okay, for all the SME companies, we don't have NSE code because some are listed in BSE. So we will have to get the BSE code for it as well. But don't worry, for now I'm just adding the NSE listed SME companies. Okay. Okay, got it. So what you can do is you can just I'm just creating an index for SME companies. That's all. I have already created it, but it's in my other trading view account. There are two accounts. Okay. Where's the mistake? Hmm. Generic drugs in SME? Oh, that is. Okay, there might be some name might be wrong, but let's consider like only 5, 6 names. I've just showed you the process how you can create one. There's some name might be wrong in this. Okay, let's try creating these many companies. Okay, it's still not coming. Okay, something might be off, but don't worry. I'll share this index, which I have in another account with you in the Telegram group, so it won't be a trouble. But yeah, just to save time, I'm just telling you that if you make a SME indicator index of combining all the SME companies, you can type in manually as well from like obviously there are too many companies, but if you take a sample set of let's say 50 or 100 companies which are listed for more than 1 year in SME segment, and you create an index for them, then what you will notice is that that index very much replicates the small cap index. Why? Because obviously small cap index is the nearest a small cap or micro cap index is the nearest representation of the SME market, because SMEs are also very that small sized companies and volatile and all. So whenever the market is good for the small caps, it is also good for the SME companies. So index level also, you can see whenever SME uh, the small cap index has corrected or the small cap index hasn't performed well, the SMEs companies have also underperformed. If you check the BSE SME IPO index, then it will not show the true representation of the entire SME market because of obvious reason, because it is only consist of the recent IPOs and not the entire SME market. It only consists of 88 companies. You can see here it only consists of 88 companies, while there are almost more than 750 companies in total. So only 10% companies, and that too only recently listed. So most of the stocks in which you invest or I invest may not be present in this index. So maybe you can create the an index of, let's say, 100, 200, 300 SME companies and try replicating it. But whenever I'm just saying you that to apply this ROC indicator for micro caps or SMEs as well, what you need to do, you need to simply follow the rules for small cap index. Like whenever the market is giving you sell signal for small caps, you need to sell your micro caps as well, like the SMEs as well. Whenever the market is this ROC is giving you buy indicator for small caps, you need to buy SMEs as well. So if you will check here, for example, January 2022 till April 2023, there was the small cap index didn't perform, right? And same was the case with the SME as well. Like the SMEs also didn't perform from Jan 2022 till March 2023. And if you were in SME market, then you might be knowing this well. But due to some recently listed IPOs, this will not, I think, reflect in. Okay, the IPO was also corrected. The index IPO is also corrected, but it doesn't always reflect. For example, Jan 2022 till March 2023. Here also you can see Jan 2022, the index was at 20,000, the BSE SME IPO index. Then March 2023, or even you can say June, it lasted till March 2023. But BSE SME IPO index started recovering from July 2022 itself, you can see. And in March 2023, it was again 24,000. Why? Because it only consists of recently listed IPOs. So only during the initial panic period, the IPOs didn't perform well. But once the market makes a bottom, market goes sideways. For example, this period, the market made bottom near June, and that's when the SME index made the bottom, and after that it started going up. But the small cap index consolidated for till April 2023, right? So this consolidation phase didn't happen in small cap IPO index, SME IPO index. Why? Because it consists of recently listed IPOs only. So in recently listed IPOs, whenever market is even near bottom or selling is not going on, then the IPOs will perform good. The market is not in panic. At least it is not. Investors are not losing money every day. So when that accumulation phase is going on, then also SME IPO starts performing. Okay. Am I audible?
Yes.
Okay, great. So this is the problem with the BSE SME IPO index, that it only reflects the IPO market of the SME companies and not the entire SME company. So that's why you can't apply ROC indicator. If we do, let's see what happens. I think I have applied it and it goes to 2000, 1500 type of level. So it is always better to follow ROC indicator on small cap index for your micro cap segment as well. BSE SME IPO. Yeah, I think here it is. Yeah. So if you see here, ROC goes to 1200 levels, crazy levels, because it is the IPO market, and obviously zero is a. Okay. It hadn't it after March 2021, it has never touched zero levels again, right? So it is a crazy type of index. So you cannot use ROC on, unfortunately, on this. Small cap 100, both are representative of the same small cap segment. So I use small cap 100, and for me the back tested level is 100. I don't use small cap 250, so I haven't back tested it, so don't know the best levels for it. But you can easily try to find out yourself. So this way you can also learn to better use the indicator. Whatever index you use, you can apply it for it and see the chart and see from where it starts going down and backtest it. So there is a backtesting available. I think it's only in the premium version. I have the premium version. So that way you can backtest it and test the accuracy. For all the strategy which I follow, the backtesting accuracy has been more than 90%. Here and this I asked in the Telegram channel for small cap index ROC level, how much cash to stay at different level of 100 line. For small cap index ROC level, here and this IG, can you please ask your doubt? How can I buy BSE SME IPO index? Indramaniji, you cannot buy BSE SME IPO index. There is no ETF available for it, unfortunately. How can I buy Nifty small cap 100 index in Zerodha? You can also not buy. You can only buy in ETFs. You can only buy Nifty 50 companies. That's it. You cannot directly buy Nifty small cap 100 index or SME index. I think small cap 100 index there still can be some ETFs. There is Nifty small cap 100 I will tell you the name. There can be some ETFs. Any other doubt? What ROC is telling at current Nifty level? I already covered. Could you show when it was clear signal ho gaya? How can I buy? Okay. How can I buy? How can I buy? Okay. Then this for small cap index ROC level, how much cash to stay at different level of 100 line? So I think I already told you at 100. Okay. From 90 you start selling. From 90 every like 2 points you keep selling 5%. So for example, when it touched 90, you sell 5%. When it touched 92, you sell 10%. When it touched 94, you sell 15%. When it touched 96, you sell uh, 20%, and so on. So that by the time it reaches 100, you are already 30% in cash. And if it goes even beyond 100, then keep on selling 5% more. Since zero is reversal indicator, then at what level of Nifty small cap can we see a reversal? Okay. So small cap, if you see the current level is 35, so it's still a long haul. You will have a few months of time correction, according to me, maybe 6 months, 8 months. But as seen in the previous corrections, for example, here bottom was made somewhere here, right? But the buy signal came here. Why? Because there was a time correction and time wasting. So it saves you from time correction as well. That's why it will reach zero when the market is ripe for the next bull market. So till then you will not see a buy signal. But at the current level also, I think bottom has been formed. Maybe 2-3% here and there, but we are very near the bottom in small cap index. There is time correction left. Maybe 6 months, 8 months, 1 year. No one knows. But whenever zero comes here, you start buying. Okay. Any other time frame to be watched here is 1 week. Okay, so time frame you can keep anything like 1 day, 1 week. It doesn't matter. It's just the visibility. Okay, it's just the visibility. But ROC you have to keep time frame 1 month. Here you can keep any time frame. It doesn't matter. The ROC will show the same results because it is working on monthly time frame. And this chart, whatever time frame you apply, it is for this chart only. It is not for ROC. ROC has a separate time frame.
I
Okay.
think Harsh, this indicator will definitely work if somebody is working on the ETF of the index. Suppose I want to
Yeah.
buy the Nifty 50 ETFs, and then this indicator will be good. Then I can buy the ETF at the when it is going below zero, and I will sell at 45 for
Right.
Nifty, small cap and all also.
Mm. Right. For ETF, it will work perfectly fine. And even for example, if you deal in large cap stocks, then you can use the Nifty ROC. If you deal in micro cap, small cap, and you also like to trade, you're not a like very long term investor, ki 10 years, 15 years, tak you have identified a company and you will ride with it, then you can keep on, booking your cash positions as per small cap index ROC. Okay, so now coming to our next part. Okay,